So there is a stock that ARK has been quietly buying up over the last couple of weeks, and they've spent in just the last 2 weeks over $25 million on this particular company. Now this stock trades at a fairly cheap stock price at $15.55, but more importantly, it has declined well over 40% off of its highs back in late 2018. And unlike some other penny stocks that they're buying here at ARK, this name has a little over $4 billion market cap, making it a decent small cap company, and I for one am very intrigued. So what I did was I looked into this business, I kind of looked at some high level stuff, and there were a few things that stood out to me that signal that this stock is possibly very undervalued at current prices, and I think that's probably what ARK believes as well, which is why they're buying so heavily into it. So in this video, let's discuss this company and let's figure out where this business is possibly going, what excites ARK about this business, and if there is potentially some upside here with this stock. Now from the title of this video, you know that it's a growth stock, so let's look at some of the growth prospects for it. This year, growth is expected to remain relatively flat. However, next year is where we're focused as the company looks to shift back into growth mode with 15% year-over-year revenue growth expected. In general, they've been pretty solid here. Revenue's been pretty consistent, so it looks like this year is just a small hiccup in their growth story. However, the red flag for some of you here, if you are paying attention, is that net income data, which tells us that the company is not yet profitable. Okay, enough teasing, guys. Let's reveal what this company is and let's try to figure out what ARK's view on this is, why they're so bullish, and what they see that regular investors aren't seeing yet. Oh, and guys, as always, just hit that like button down below. It helps channel out tremendously. Let's try to get 1,000 likes on this video. We haven't done that in a while, and I truly appreciate your support for that for the YouTube AI. Pure Storage, this is the company that we are discussing here today, and you may or may not have heard of this company before, but let's educate you a little bit on what their business does, and more importantly, why I think ARK is buying them at these seemingly undervalued prices. So ARK here, as you can see, spent over $25 million so far in the last 2 weeks on PTSG, that's their ticker symbol, and they may be buying a lot more in coming weeks. It's clear that ARK is bullish on this company for the foreseeable future. But what does this company do that excites ARK so much? Pure Storage is a company that develops all flash data storage hardware and software products. They have all the buzzwords going for them currently, data, cloud, AI, machine learning. These are all things that they are involved with and help with. They've created something called Storage as a Service, which enables companies to run their operations as a true automated storage as a service model seamlessly across multiple clouds. This allows their customers to use their data effectively without worrying about data storage and infrastructure hurdles. As we mentioned, they are a fast-growing company and they do have customers in the Fortune 500 space across a wide range of industries, including companies like Domino's, the pizza, and ServiceNow, to name a couple. They have a little over 8,000 customers currently, so a very healthy number of customers, and this has been steadily increasing every quarter and has helped them continue with their growth momentum. A couple of other points that piqued my interest was that they have a strong subscription model, which means strong recurring revenue, and that is growing rapidly at 37% year over year. And as this growth continues, it's helped them to gain market share with the competitors in this tough environment. In fact, even when competing with giants like HP and IBM, they're leading with growth as they continue to steal away market share from others in this space. But now here's the thing, we saw the data, we know this company is not profitable, so why would anyone consider investing in them? Well, there's a lot more to that we should dissect here. They have very strong gross margin, guys, which sits at just under 70% currently, which is more or less in line with their long-term goals. This tells me that eventually the margins, since they are so high, will play a major role in driving profitability for the business. The other metric that I found interesting was looking at their free cash flow. This tells us how much cash the business has on hand after they've paid their expenses, and then they can use this cash for whatever they want. They can reinvest it back in the business, which is what most companies do for growth. They pay dividends, which is again what a lot of companies do to reward shareholders, or they just let it sit in cash on their balance sheet to strengthen their financial position. Pure Storage has positive free cash flow, which is a healthy sign for the business, and it has been steadily increasing for the last year. So I expect this to accelerate in 2021 if those growth projections we saw earlier come to fruition. So we know what this business does. We know that they're a growing company. We know that they have subscription at their core, which excites investors. We know that they're not profitable, but they have positive free cash flows with good gross margins. So why is this stock down 40% off of its highs? And also kind of tied in with that, why is this so appealing to ARK right now? I think that ARK realizes that this company will thrive in this new age that we're living in as more data is going to the cloud and more businesses require assistance in managing and storing their data as well. The other metric that really jumped out to me was that even though this is such a high growth company, they have an incredibly low price to sales ratio. Now, assuming they're able to hit their target for next year for revenue, which is $1.9 billion expected, and if we assume their market cap today is, consistent at $4.17 billion in revenue, and if we assume that their market cap today is consistent at around $4.17 billion, this gives us a 2021 forward price of sales of 2.19, and that is low. We can see here historically with this stock, a 2.19 price of sales would put it at near its historical low levels, and to me, to see such a high growth name trading at such a low price of sales is often hard to find. That being said, even at its highs, it was at a price of sales of near 6. So I mean, this isn't a very expensive business from this metric. However, even with this information, it's well off of its average around a 3 or so, which signals to me an undervalued high growth company. I think ARK realizes this. I think ARK sees this as an undervalued play that should be valued higher based on what they're doing, based on their growth, based on their customers, based on their segment. So they are putting big money into this to kind of make a bet to say, hey, we believe in this company. So does this mean that the stock is going to shoot up 50% or 100% tomorrow? Well, I mean, anything's possible in the markets, but it's very unlikely. I think the stock is probably waiting for some sort of catalyst to start moving it higher. It's just been kind of slowly trickling down over the years. Nothing really significant moving it. Investors are like, hey, growth is slowing down in this company, but many are not looking out ahead to 2021 where growth is expected to pick back up. Now, if that growth picks up like expected, of course, I believe that the stock would be severely undervalued at today's prices, and at a $4 billion market cap, I think there's a lot of upside here for investors. I think this stock is kind of forgotten about, just beaten down by investors. And if you believe in this business, you believe in their model, you believe in this sector, this is typically the ideal time to start building out a position. It's usually what I do. I look for companies that are beaten down, but I still believe in, and that's when I find my best entry points. Tesla, Nvidia, those are two companies that I bought down when there was pessimism around them. People aren't looking forward to the future of those companies. They think those companies are done for. And I was just like, guys, look at the facts. In a few years, these companies will turn things around. They're going to be massive. And that's exactly what's been happening. Now, you have to have very high conviction when you do that. You have to understand the business inside and out to do that. And for those of you that are interested in Pure Storage, I would highly encourage you to go read the investors relation page on their website, read the presentations they have, read their metrics, understand the business completely, and that'll help you double down on your investment if the stock price declines any lower and you still believe there's upside to be seen. So I'll say this, I think this stock definitely has potential to be a multi-bagger investment. $4 billion market cap seems a bit low for the amount of customers that they have, for the growth that they're expected to see. I think that investors will be rewarded quite handsomely with the stock if things pan out as expected. Either way, guys, let me know in the comment section down below. Are you buying this stock? Are you interested in the stock? Did you know that ARK was actually buying the stock? I'd love to hear your thoughts in the comments down below. But either way, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.